Hey, good morning, everyone. Welcome to the new week and the macro snapshot. We are recording this on Monday, February the 23rd, 2026 in the morning. Okay, I had quite a substantial chat yesterday just about all the tariffs and whatnot. So let's just update pretty quickly the market reaction and just see if there's any new information. What we can sort of just see overnight in terms of the reaction from sort of other trading partners of the US is that, for example, over in Europe, the European Union has says that they may freeze ratification of the trade deal which was agreed with the US. A lot of other countries as well are sort of reviewing the situation. So the point is here, I think we're just in a sort of a wait and see in terms of the sort of political fallout. We know that Trump put the this global tariffs up to about 15% or so, and it does seem as though there are sort of a few winners and losers. And again, just trying to figure out what's going on. So what is interesting is that countries like the UK and Australia seem to be a little bit worse off because they seem to be paying a little bit more tariffs. On the other hand, countries like China and Brazil, which did have sort of relatively elevated tariffs, will be paying a little less in the shakeout. So it does appear that there are some winners and losers, and we'll have a look in a second at some of those markets just to see what's going on. And I think just generally what the market needs to figure out, there's kind of three main questions here, which traders will have to sort of understand, and everyone really is sort of number one, how will the US sort of compensate or make up for the less tariff income? So the fact that the tariffs under IEEPA are no longer ruled, no longer considered or have been ruled illegal, how will the Americans attempt to sort of to make up that sort of shortfall? Second question is, of course, how will other countries react? And there's still pretty early days for that. So perhaps this week we'll get a better sense of how other countries will react. And thirdly, how will the US administration sort of try and implement other trade policies and other sort of legal sort of justifications for tariffs, the so-called sections, 338, 301, 232, this kind of thing. So they're the three big main questions. But again, I think it's still too early days. And so overnight, there hasn't been too much of a huge market reaction. So let's just review a few things. I just quickly want to look at the VIX here, just to keep an eye on the volatility. We can see that something like oil, for example, oil volatility remains elevated, which is normal, considering the sort of the continuing geopolitical tensions in Iran and the US. If we look over at the bond market in terms of the volatility, still not on off. It's still not super elevated by any shape or form, but a little bit off its sort of lows. If we look over at gold, gold volatility is starting to pick up, as is silver volatility as well. So still a bit of volatility. And then, of course, if we look at the equity space, we'll just look at the VIX. You can see that is, again, off its most elevated levels, but still above the 20 handle at the index level, which is reflecting, it's certainly not, 14, 15, 16 or something. And I showed you in yesterday's videos that we are still at, relatively elevated levels. So there's still underlying tension. And what's kind of interesting, came across a chart just this morning, which gives you a little bit of a sense of what's going on. And, I don't want to be sort of the panic merchant or anything like that, but it is interesting here to look at the overall VIX. So look at the overall VIX here, and this is going back 10 or 15 years. So this is quite a long-term chart here. And you basically see here in the orange, this is sort of the VIX levels. Okay, obviously it's spiked in COVID, and et cetera, et cetera. So you see the overall VIX level, is not too bad, 17, 18, 19. But what is interesting is the constituent level VIX. So that's basically a market cap weighted average. So market cap weighted average of the VIX, or sort of the volatility, implied volatility on all the individual stocks or constituents of the S&P 500. Okay, so not just looking at the index, but saying, hey, we've got all of these individual stocks. What is going on with them if we do sort of a weighted average? And what is interesting, historically, as you can see, that's normally higher than just the index itself. And a lot of sort of institutions actually trade this and essentially are basically sort of long the you basically do a spread trade between the volatility of the index and the constituents. But the point I'm trying to make here is that if you actually look at the spread, and this is the interesting thing, is the spread, which is the green sort of chart down below, the green line down below, you can see that essentially it's sort of pushing quite a lot higher in 2026. So what that is indicating is that under the surface, like of the index, which is more or less the last 2 or 3 months has been trading in that range around its highs. You can see that under the surface, the volatility on individual stocks is actually increasing. Now, we know there's been a lot of rotation and dispersion and whatnot, but it's just interesting to keep an eye on that and just sort of to ask oneself, is it possible that we're due for a little bit more volatility in the overall index itself? Because certainly below the hood, as people like to say, under the hood, there's certainly a lot of volatility going up on the individual stock level. Now, of course, we have NVIDIA this week. Who knows? Will that be a catalyst of, certainly that should be a catalyst for NVIDIA, but will that be a catalyst for the index or the indices as a whole? Anyway, just interesting to keep an eye on that. Okay, so let's just look at what I want to do this morning is not talk too much about the big picture. I did that enough in yesterday's video. So if we just look at the individual indices here, we can see that if we go not to global but to the US, we can see that overall the US indices are all down about 30, 40, 50 sort of basis points this morning. So just looking at the ES, the key levels, as I indicated yesterday, the key level for me is this 61.8% fib retracement, which comes in at about 6,900, let's call it, and 6,930 on the ES futures. And you can see here that it basically failed. We had a pretty strong day's trading on Friday. It was relatively choppy, but overall on Friday was positive. This sense that, importers would have, better profit margins because either they'd be paying less tariffs, or on the other hand, they could they wouldn't have to sort of eat any of those tariffs in terms of eating into their profit margin. So one could argue that at the margin, slightly less tariffs, and I do believe it's only going to be slightly less tariffs by the time the White House figures this all out. Slightly less tariffs will allow for slightly better profit margins. And of course, for consumers, one could argue, again, just at the margin, that there may be some sort of tariff relief in terms of sticker prices. But I personally don't think that's going to be too much, because we know that companies, it's rare that they just sort of, give back stuff to the consumer. Anyway, the point is that overnight, we're still seeing the market finding it difficult to go up. And in fact, it's kind of failed there. So for me, that's going to be the key test today. The bulls will definitely need to get above that 69.27, 69.30 level on the ES futures. And if they do that convincingly, for sure, they could reach a new high. So that's going to be the key level. And that's going to be the battle, the line in the sand. And if we get above that, I think, for sure, it could be a question of grinding higher to test the highs over at about 7,018. Similar kind of situation on the NASDAQ. Again, you can see relatively contained price action overnight. Exactly the same situation. Overall, that market has been weak for the last 2 or 3 months. We know that. But again, just in terms of the key levels, I would say that on the shorter term fib, the recent high of about 25,125 and the fib level of about 25,060, that's kind of the pocket, that's kind of the range there. And again, the bulls haven't yet breached that in a convincing fashion. They'll need to do that. And you can see here the moving averages, the 20 has crossed over, not only over the 50, but also over the 100. So, still fairly I would say underwhelming price action in terms of the Nasdaq. If we go to the small caps on the Russell, that's a little bit more convincing. You can see here the moving averages here. There hasn't been any EMA crossover at this point, so that's more positive. You can see though on Friday the price action was a little choppier compared to the Nasdaq or the ES. So again, just sort of trading within a range. Nothing particularly, no particular conviction shown there. I'm not going to go through all of the subcomponents, but again, as always, today I want to keep an eye on the equal caps, which pre-market seems to be down a little bit after that strong performance on Friday. If we look at the Mag 7s, that seems to be down just a smidgen in pre-market as well. Again, though, that had a pretty strong and convincing sort of bounce on the Friday. Let's see if that is sort of continued today. That bounced off the 200-day EMA. The semiconductors continues to go well, down a little bit in the pre-market, but again, trading pretty close to its highs, and that was strong. And what I want to keep an eye on today as well, of course, is just this incredibly weak price action, which continues to be shown by the software sector, specifically, let's say the IGV and companies like Microsoft and Salesforce, these kind of companies. And you see, as I was saying yesterday, the price action here is feeble and completely opposite to, let's say, something like the semiconductors. So that's definitely something to be keeping an eye out for today. And the point is, until and unless we get a little bit of a bounce in the software sector and hopefully something with the Mag 7s. The point is that I don't think that the semiconductors by themselves is enough to make Nasdaq or the Qs, the QQQs, sort of reach new highs. We're going to need all of the big sectors to sort of participate. Having said that, let's look at global equity a little bit. And then, as I was saying, there does seem to be a few sort of more winners and losers. If we look over in Europe, let's just look at the Euro Stock 60. That market is open, so you can see here pretty strong on Friday, just a sort of subdued price action today, but nothing nasty, and trading very, very close to highs. So that's a positive. One thing which I did see overnight is that Hungary, in terms of the European bloc, is threatening to veto extra defense spending to come to the aid of Ukraine. And so sort of defense stocks over in Europe have been a little bit hit on that sort of political impasse. But overall, it looks like the Euro stocks are trading fairly well. If we look, let's say, at Japan, that's again a little bit subdued. Is this some kind of bear flag? I think, to be honest, this whole story of Japan and fiscal stimulus and the new increased majority by Takaichi's Liberal Democrats. The question for me is, is this sort of priced in? Is it priced into the yen as well? Because this sort of happy story of, the new government and everything, the Japanese stocks, excuse me, itchy nose. The Japanese stocks have had a pretty good run here, and I just wonder whether it's just going to take a pause and it maybe needs a little bit of fresh news or fresh impetus to push to new highs. We'll see. I mentioned that Brazil, their tariffs overall should be coming down net when everything sort of comes out in the wash. And you can see here that Bovespa, which has been on a huge tear, very strong price action. I'm not sure if that market's actually open today. This is showing Friday here, but that's so going very well. So commodities doing well, less tariffs. That's a happy story over in Brazil. Also, what's going to be interesting is to keep an eye on India. India just signed the trade deal with the US. You can see here, like basically a couple of weeks ago. So let's just see what happens here. Pretty subdued, up a little bit today. India may be paying a little less if we just go with a 15% global tax rate, or tariff rate. So that could be sort of a slight positive for India. We're seeing the UK, not having too much of a reaction, but again, that's considered a slight negative. If we look at Australia, again, a slight negative because they'll be paying, a few percentage points more. But again, these are marginal sort of numbers. But you see here that the Australian 200 ASX trading above the highs, so still pretty positive because the domestic situation, the domestic economy in Australia is good. There's a little bit of inflation, but it's almost like healthy inflation. The employment situation is strong. The commodity base is strong. So the Australian economy overall, internally, domestically, is doing well. So it's going to be, who knows? Will this really sort of dint at the stocks a lot? We'll have to see. So overall trading relatively well. In China, I believe the market is coming back to China. The main market participants coming back from a holiday tomorrow. You can see that the Shanghai 300 down a little bit, although I'm not even sure that one is open. That's showing Friday, so I'm not going to look at that. Might actually look more at Hong Kong, the Hang Seng. So the Hang Seng CEI is basically for China enterprises. So this is big Chinese large caps, mainland large caps, which are traded in Hong Kong. And that market seems to be open and showing quite a lot of positivity because, as I said, it seems that China, at the margin, will be slightly better off in the sense of slightly lower tariff rates. So that's looking relatively positive. What we can also see is that the Kospi down a little bit, but still, just trading monstrously well. I mean, this is very, very overbought at this point, the RSI, et cetera, et cetera, et cetera. Although we have had a couple of consolidations along the way. It's going to be an interesting one to keep an eye on this, as long as the semiconductors continue to outperform, and as long as memory chips, people are paying a premium for memory cards and memory chips. This is going to continue going well. But you've got to say, at this point, it's sort of nosebleed levels. So just interesting to see if there's some kind of consolidation coming up. But overall, the Korean market doing pretty well here. Just finally, want to look at the pre-market for something like FXI, which is the large cap China stocks. You can see it's up a few cents. Not bad. That's going to be an interesting one to keep an eye out for today. Also want to have a look today, keep a focus on the EEM and just see if general they're enjoying maybe having slightly less tariffs than previous to Friday. Okay, so that's that. In terms of some other markets, want to keep an eye, of course, on oil. as I was saying in yesterday's video, the state of play at this point seems to be some kind of ongoing talks in Geneva on Thursday. There's skepticism on the US side. The Iranians seem to maybe not want to completely give up their uranium enrichment sort of program. So who knows? Maybe there's going to be sort of an outlier that Trump will actually do an overnight attack or something like that. We shall see. So the oil market is reluctant to completely price out sort of risk premium. On the other hand, it doesn't particularly want to rip it too much higher because the oil market does seem, from a fundamental point of view, to be relatively balanced. It does seem that there is actually a physical surplus and oversupply of oil, but a lot of that oversupply is in the so-called black market. It's like sort of sanctioned Russian barrels. Some of the Venezuelan barrels are still sanctioned, and the Iranian barrels. So it seems to be that in, let's call it the legal market, there is actually a bit of an undersupply, and the markets are quite tight. And that's what's keeping the oil market price relatively high at this point. But again, you can see clearly the levels here. It's like the 66.30 level. You can see the recent high up at about 67, finding it difficult to breach that. And then, of course, you've got a slightly higher level going back a while to the middle of last year, up at about 68. So again, the main trading range here is around about $67 down to about 62, that $5 range there. That's really where the market is most comfortable trading just at the moment. But of course, any kind of geopolitical developments, either sort of, a big deal, this price will probably go down $2 or $3. On the other hand, of course, any kind of escalation in the Gulf and the Middle East, of course, will cause that to spike up at least, let's say, to 68.50 at a minimum, but probably more a little bit higher. Because as you can see above that, we do have quite a lot of blue sky, so to speak. So if we get significant military action, I think this will rip higher to 68.40 in a blink of an eyelid, and we could actually see this into the early and mid 70s without too many problems. In terms of the precious metals, they had a fairly good a sort of weekend, so to speak. You can see here gold, you see all the moving averages. It's still pretty strong. And the point I want to make is that, something like the CTAs, the trend followers and whatnot, for sure they probably reduced their position, and this cleaned out a lot of weak longs. But the longer term CTAs, those who are using moving averages, 256 days, 128 days, those guys will have just reduced their position sizing, a little bit modestly. And you can see that from a long-term perspective, this is still in an uptrend. And what we're seeing here, which is kind of interesting, is if we look at this fib retracement here, we'll go on the longer term one. You can see here we're at a pretty key level at the 68.1 fib retracement here, which comes into about 5,177, as you can see. Let me just make sure that I've got the right level there. I want to be very accurate. Yeah, so pretty key day. And again, that's a benefit from a little bit of, the increased inflation maybe in the US. Tariff uncertainty is creating more uncertainty. And of course, we still have some geopolitical risks. We still have the situation in Russia, Ukraine, and obviously in Iran. So the point is that gold had a nice couple of 48 hours of trading, so to speak. But just keep an eye on this level, 5,180 in terms of the front futures contract here, because that is the 68% fib retracement. We could see a little bit of sideways consolidation here, or maybe even some drifting downwards. But if the bulls are sort of feeling bullish, of course, if they push above there, then we're out to have a sort of a fib extension, which could be up here. We could start to test some of those recent highs. So that's a pretty key level at the moment in gold. Silver also looking promising. If we have a look here at the fib levels, not as strong a performance as gold. Let me just put that. So you can see here that we are above the short-term fib, but we're still just at the 38% fib. If you look at the big sort of level here, the 38% fib retracement. So again, a pretty key level for silver, because this is the beginning of this is one of the hurdles which the bulls ought to overcome if they want to show more action. So again, silver finding it a little more difficult, but nonetheless, it's been a fairly positive 48 hours. Also, I'm going to be keeping a bit of focus here on platinum and palladium. Platinum is starting to break out. Again, it's not the futures. This is just the spot price here. So that's also starting to push higher, and palladium also. So interesting that palladium has been a little bit of the laggard. So we might see that the palladium and platinum pushing out as well, and they're not quite as gone as gold. So something like platinum and palladium ETFs could be interesting price action today. As I said, I think the Chinese market's coming back tomorrow. So copper not doing a huge amount, but if we do see the Chinese market coming back, and we do see the precious metals doing well. Copper could be due for a little bit of a sort of a push higher as well. It's sort of, it's held at 61.8% fib retracements, and it's not doing anything sort of horrible at the moment, just sort of ranging around. So it wouldn't surprise me if we see copper pushing a little bit higher as well. Finally, BTC had a bit of a sell-off last night, but it's come back a little bit. But again, distributive price action still fairly weak, nothing too exciting there. And definitely, if you want to compare it to the metals, very much an underperformer. Just in terms of some of the FX, some of the currencies, we can see that the dollar index basically failed or has been failing at the 61.8% fib retracement, as I pointed out yesterday. This is a pretty key level here, which is around about 98. Sold off a little bit, uncertainty about the tariffs, etc., but coming back, grinding back a little bit higher. I would say nothing strong overnight. Really, what we will have to see is to get above this 50-day EMA, the 100-day EMA, and a clear break of this the 61.8% fib retracement. We haven't quite seen that yet. Not a huge amount of action in the FX market, but this is really the levels to be looking at. In terms of the Japanese yen, also fiddling around, so not really too much to see there. In terms of the euro, again, the euro just holding support in this sort of fib retracement pocket here, around about 117, 118, something like that. Actually, a bit below 117.50 would be a better way of looking at that. But again, showing a little bit of just sort of weakness here. So I don't exactly know what the catalyst is there. And that's about it. Okay, guys, I'm going to leave it there. We don't have too much data this week, nothing particularly strong today. We have a few Fed speakers. We have Waller today speaking, so that's going to be quite interesting. In terms of the other data, not a huge amount of tier one data today, so I'm not going to go into that. I think really the market will just be on the lookout for pushback, as I say, from other countries, whether Trump and the White House in general, if they try and give a bit more clarity about the situation. And of course, what we should actually, I forgot to mention, is keep an eye on the yields in the US, because I just want to keep an eye on these sort of longer term yields here. Let's say looking at the 10-year, essentially the market here didn't want to go too much below the 4%. That seems to be the floor in the yields for the 10-year at the moment. And as I say, if the market believes that there's going to be more issuance because there's less income coming in from tariffs, and therefore less contribution, shall we say, a tariff contribution income to lessening the deficit at the margin, that is not great news for the long end of the curve, because in theory, the US Treasury will have to sort of issue bonds to make up for that shortfall in tariff income. But again, this is quite marginal, and I don't know if it's like a huge issue, but we could expect to see the long end under a little bit of pressure. So I'm going to be curious today just to keep an eye on the yields on the 10-year, although it does seem to be going down a little bit just overnight here. And also on the 30-year, you can see that it spiked on Friday, but has come back a little bit. So that's something to keep an eye out as well for today. Okay, have a great trading day, guys. I'll be back tomorrow morning with the macro snapshot. So enjoy yourself and have a great day. Thank you.